Hey guys, welcome back. Coach here with Trip and Farm for Property, where we don't trust, we verify and operate with integrity and transparency. Today's video, we got another recap from Jack Mahler's podcast, his Mailbag Mondays, and we're gonna be diving into this in more detail. But I'm gonna use Jack as the initial catalyst because he was going off in his what he calls his rants, and rightfully so because I'll give you a little context. He was seeing some writing on the walls from issues happening in his home state, Illinois, and city Chicago, and the things that are happening with crime and also policies being changed for tax laws, things of that nature. So he was pretty aggravated in this, but in this specific piece, he's talking about a recent post that I'm going to show in more detail here from the Fed on the official federalreserve.gov website. It's not some blogger. This is our official government posting this. So let's dive into this clip.
Again, another massive deal that if you were to tell me a year ago, 5 years ago, 10 years ago, I would have never believed you. Fed quietly publishes bombshell article discussing gold revaluation. The idea has come up in the context of helping to establish a strategic Bitcoin reserve or a sovereign wealth fund. So the Fed went out and published an article that talked about revaluing the gold on their balance sheet. Obviously with Bretton Woods, we marked gold at $35 an ounce. Gold is no longer $35 an ounce. The price, obviously in the free market, floats freely. The dollar has gotten debased. And the Fed specifically noted that revaluing the gold could be used to acquire Bitcoin or start a sovereign wealth fund for the United States. I think we've technically already started, but actually funding it with a significant amount of capital. I love this tweet from Luke Roman. Interesting timing and an admission, the US dollar has fallen from 1/42nd ounce to 1/3300th ounce of gold in the past 54 years, a compound annual growth rate of 8.4%. which, since everyone suddenly cares about economic data accuracy, is much higher than the official reported US inflation rate over the last 54 years. So here we have the Federal Reserve now saying, well, hold on a second. We've been marking gold incorrectly on our balance sheet. If we remarked it, we can stack some sats. Oh, and by the way, this is an admission that our ability to account for inflation has been blatantly wrong. 8.5% surely is a lot bigger than the 2% you scammers have been advertising to the American public and the global population for how many decades?
I'll pause that there because that is a lot to digest. So let's first break this down in this post that they made. So the opening paragraph says, with public debt at high levels, some governments have begun to explore financial additional expenditures without raising taxes, while also not increasing public debt outstanding. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the US and Belgium recently. For the US, this would involve revaluing the government's 261.5 million troy ounces in gold, which we don't even know if they have or not, but that's the book value. That's what they say they got. The largest gold reserves globally for a statutory price of $42.22. Now, to understand that, we got to go back. And we go all the way back to Executive Order 6102 out there by Roosevelt, FDR, where he actually made it illegal to hoard gold. So basically, back in 1933, he made this executive order that had people turn in their gold. I think the exchange rate at that time was around $20. So if you had gold, it became quote unquote illegal to hoard it and keep it. So this was the first playbook that the US ran, where they pretty much just stole from their citizens. So keep that in mind as you think about digital gold and Bitcoin and keeping your Bitcoin on exchanges that are underneath the US regime. Not saying it could happen again, but it did happen at least once, and that's enough for you to at least have some pause. So 1933, they confiscate all the gold, and they end up becoming one of the largest gold holders. So at that time, $20.67. We fast forward to President Nixon in 1971, where he makes this statement to quote unquote defend the dollar.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what is this action, which is very technical?
We can pause that there. Remember, it's supposed to be temporary, but here we are 40, 50 years later almost. And you are definitely not going to be exchanging dollars for gold and whatever it was turned into at that stage. So there is no backing in our current fiat, and there's no backing on any fiat currency. That's exactly what fiat means. It means by decree, or in blatant terms, because I said so. Also, side note, in case you were wondering, this SATS, so basically that's the plugin that I installed that I told you guys about in the previous video. It's by opportunity cost. And basically what it does is it puts any dollar value on a website in SATS, and you can turn that off and it'll get rid of it. So it's just on each site, in case you're wondering. So that gives you kind of the recap of what happened and where we are now. So let's go back to this note here. So here's something else very telling. Over the past 30 years, 5 countries have done this exact same thing, meaning revaluing their gold on their books: Germany, Italy, Lebanon, Morocco, St. Martin, and South Africa. Central banks have used revaluation proceeds to offset operating losses and maintain net profits or minimize reported net losses. So the thing you should be asking yourself, let's actually show you the numbers here real quick. So US gold reserves, 261.5 million. Book value that they have, $42.22, puts it at $11 billion. The current price of gold, which we see here, $33.59.60, means that they would have a new total of $878 billion, or a difference of $867 billion. What you should ask yourself is, where does this money come from? Where and how does that actually work? So this right here is case in point proof that money is a social construct, and these central banks that can offset operating losses, maintain net profits, are literally just coming up with numbers that they deem is in the best interest of all of them combined. These are not real numbers. They just made it up. So for the last however many years they've held this value, they can all of a sudden wake up today and go, you know what? Let's go ahead and mark it at the current rate. And we now have gained $867 billion. What do we want to do with that $867 billion? And according to this, they are looking at ways to accumulate Bitcoin or do something else with it, basically. They didn't really say Bitcoin specifically, but however, you come down here in the footnotes, they mention that the ideas come up in the context of helping to establish a Bitcoin reserve or sovereign wealth fund and use the reevaluation proceeds code and recent legislation. That's Senator Loomis. So all of this is just the Fed putting together all of the notes saying, hey, we do have a problem with our debt, and here's an opportunity, here's an option. Other countries have done this. That's all. So it's not saying they will buy it, but it's not saying they won't. But it is stating that they can basically create this money out of thin air. So whatever they decide to do with this, they will be the ones to, on the books, say it's this new value and then create almost $900 billion they get to inject or put somewhere else. That is crazy. Now, fast forward to this, we had from Scott Borsen, this interview.
Also started to get into the 21st century, a Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
And Mr. Secretary, all of these ideas to monetize the asset side.
So that statement by Scott Borsen caused Bitcoin to crash. But well, not just that. It was that along with the bad PPI print. But when you look at the numbers, Bitcoin took a dump of about 5%, which isn't even a big deal. Like, I use the word crash because it's what everybody else in the is saying. It's like, oh my God, the sky is falling. But we've seen this happen before. So him coming out stating that basically caused some panic, and it went down 6.5% in one day, depending on what chart you look at, 5%, 6%, whatever, right? Then he has to come out publicly after that and kind of walk back that statement. So after that aired, he came on X and said, Bitcoin has been finally fortified in the Federal Reserve. Federal government will be the foundation of strategic Bitcoin reserve established in his March executive order. In addition, Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin, to expand the reserve, and to execute the president's promise to make the U.S. the Bitcoin superpower of the world. Now, if I were a betting man and I were one to try to want to accumulate more Bitcoin than I currently have, and as I showed you guys previously with what Jack Mallers was saying, they more than likely have less Bitcoin than they originally stated, and maybe found out that the previous administration was selling a bunch of it, then they may be trying to put out quote unquote FUD, knowingly or unknowingly, that causes the price to crash, and then behind the scenes stacking sats. Now let's go back to that clip real quick that Scott mentioned right here.
Is somewhere between 15 and 20 billion.
So he's saying the current valuation, and that could be misdirection, but it could also be letting us know the truth again, right? So we come out here to bitbo.io, and supposedly the US owns 198,000 BTC. And remember, I showed you that individual, what do you call that person? Independent journalist discovered that there was like 28 or 30,000. And that's again only by one agency in the US. So that's not saying that's the total amount, but we can go off of what Scott just mentioned. And 15 billion to 20 billion at the $115,000 price tag puts BTC between 130 to 173,000. So the theory again that Jack posed is that we have less than we said we had, and we may not be number one, or may not be as a forefront runner like we'd like to. So a easy way to correct that is put out some stuff that caused the BTC price to dump, and then in the background you still have your custodians buying sats. So I don't know what is the actual truth or not, but I do believe that they will indeed find ways, as he mentioned here, to expand the reserve. And I do believe that this was no accident, the Federal Reserve putting this notes out. Whether or not they use the gold on the books is unknown. Whether they use the tariffs or something, unknown. But make no mistake that Bitcoin is definitely going higher from here, at least during this administration, because of all of the stuff going on that we're seeing. And I did run this through ChatGPT basically to find out that that is indeed an 8.8 compound annual growth rate. So when you actually do the math on where we were with the book value and then where we are now, that comes out to compound annual growth rate of about 8%, 8.8%. And that means every 8 years, you are losing 50% of your buying power. So let that sink in, that if you're storing your paycheck in a savings account, checking account, 401k, treasury bonds, unless your 401k is in the S&P 500, because that at least will get you even. But you're basically getting debased by 8.8% every year. And on average, every 8 years, Whatever costs you $100 will cost you 150. So that is insane that you cannot save your way to wealth. Like, there is no solution with any of this outside of basically getting out of the current system, the current matrix, the architecture. Bitcoin is the engineered solution outside of the matrix. And the writing is on the wall. Everything is pointing in one direction, what you need to do and how you can escape the matrix. And if you're not paying attention, you will indeed get left behind. And the solution that I tell everyone is, yes, stay humble, stack sats. Find a way to dollar cost average routinely on whatever your budget will allow, daily, weekly, monthly, quarterly, biannually, annually, I don't care. Whatever it is, buy Bitcoin and don't sell it. That's really the only option you have. And if this becomes a thing and we start to see the government come out and say that they have been accumulating Bitcoin, or this is their plan going forward to accumulate it, make no mistake that this is going higher faster. And if they actually do this, devaluing or revaluing, I should say, gold, that will devalue it in the eyes of other people that are holding gold. Because again, let that sink in. If you're currently the world's largest gold holder, and then you take the proceeds, the dividends, the revenue that you have from gold, and you buy something else and not buy more gold, what is that telling you about where you think the future is going and what is the most important way to store your nation's capital? All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your possible. See ya.